Hey everyone, and welcome back for another deep dive. We're cracking open Broke Millennial Takes on Investing today. You know, that book everyone's talking about. Let's unpack the best bits and see how it applies to you and me.
It's a really great pick for, well, anyone who wants to get a grip on their money and start building towards, a solid future.
Right. And it jumps right in, doesn't it? Erin Lowry, she's the author, makes it super clear. Before you even think about stocks or opening those brokerage accounts, there's work to do.
Exactly. Yeah. She calls it like building your financial foundation. Get your financial house in order before you start like decorating with fancy investments.
I love that. It makes so much sense. And she brings up this financial oxygen mask thing. What's that all about?
Oh, it's a good one. It's all about taking care of your own needs first financially before you try to help out anyone else, like on a plane, right? You got to put on your own mask before you help anyone else.
Oh, yeah, of course. So how does that translate to money stuff? What does that actually look like?
So, like, think about building your emergency fund, paying down any high interest debt you might have, making sure you've got all your essential bills covered. All that before you even think about investing, taking care of your own financial well-being. It's priority.
So it's less about being selfish and more about being responsible, basically.
100%, yeah. Like, imagine trying to learn about investing when you're also juggling credit card debt and like constantly stressing about bills. Not a good combo, is it?
No, not at all. Lowry has this ready to start investing checklist.
Yeah.
It's not about hot stock tips or anything like that. It's way more down to earth.
Yeah, it's like create a budget so you can actually see where your money's going. Build that emergency fund, 3 to 6 months of living expenses, and tackle any high interest debt you've got.
I think a lot of people might assume they need to be completely debt-free before even thinking about investing, but Lowry doesn't say that, does she?
Nope.
Yeah.
She's pretty clear about that. Like, as long as you're managing your debt, making payments on time, not letting it get out of control, you can start investing,
Yeah.
even while you're paying things off.
It's almost like taking care of your finances can have this ripple effect on other areas of your life too, right? Less stress, better relationships, maybe even more freedom in general.
Definitely, yeah. It's about creating that sense of security and stability financially, which can just like lift everything else up a little bit.
Okay, so you've worked through that checklist. You're feeling good about your financial situation. The next hurdle is, well, actually starting to invest.
And that's where a lot of people, I think, get intimidated. But Lowry does a really good job of making it all approachable.
She takes you through the process of opening a brokerage account, right?
Yeah, exactly. She lays out all the different types, like the full service ones, discount brokers, the online robo-advisors. It's all about figuring out which one fits you and like how comfortable you are with technology.
So many options. How do you even know which one's the right fit for you?
I guess it depends how much help you want. If you're more of a DIY person, happy to manage things online, then a discount brokerage or a robo-advisor could be good. But if you want someone to hold your hand a bit, give you advice, then a full-service brokerage with a human advisor is probably better.
And she goes through all the confusing financial terms too, doesn't she?
Totally, yeah. She defines all those words like asset class, portfolio, time horizon in a way that actually makes sense. It's all about giving you the knowledge to like make smart choices with your money.
Awesome. So we've covered the groundwork, getting your finances in order, and the basics of opening a brokerage account. Now we need to get into the actual investments themselves.
That's where it gets exciting. Lowry goes into all the different types, index funds, ETFs, individual stocks, even robo-advisors.
Wow, so many choices. Where do you even start?
Well, Lowry says there's no magic answer. The best option, it depends on what you're aiming for, your risk tolerance, how hands-on you want to be. It's all very personal.
Let's break it down a bit. Starting with index funds, Lowry seems to really like those, especially for beginners.
Yeah, and for good reason, right? Index funds give you that built-in diversification, so you're not putting all your eggs in one basket. You're basically buying a tiny piece of loads of different companies all at once.
Sounds like a good way to reduce risk then.
Exactly. And usually index funds have lower fees than, what are they called, actively managed funds. Those fees can really eat into your returns over time.
Right. Now what about ETFs? They sound kind of similar.
They are. ETFs, or exchange-traded funds, those also track indexes, but they trade like regular stocks. You can buy and sell them throughout the day on an exchange.
So why would someone pick an ETF over an index fund then?
It can come down to specifics like maybe flexibility or even just what you prefer. Lowry really encourages people to do their research, compare the options, and find the one that works best for them.
All right, makes sense. Now, individual stocks, those are a bit more, well, risky, aren't they?
Yeah, definitely a bit riskier. With individual stocks, you're betting on one company, right? So there's potential for bigger rewards, but also a higher chance of things going wrong. You really need to do your homework, understand the company, their finances, their future plans before you put any money in.
Lowry uses a great analogy here. Don't put all your eggs in one basket.
It's so true. Diversifying is key, right? Don't just put everything into one company. Spread your investments across different asset classes, different sectors, even different parts of the world. That way, if one thing doesn't work out, it won't wipe out your entire portfolio.
I see, yeah. Okay, and lastly, what about robo-advisors? They seem to be everywhere these days.
Yeah, they're getting super popular. Robo-advisors use algorithms to create and manage your portfolio for you based on like your goals and how much risk you're comfortable with. They're usually cheaper than human advisors and can be a good starting point for people who aren't sure where to begin.
But what if you want that personal touch, that advice from a human?
Lowry gets that. There are definitely times when a human advisor makes more sense. Like, if your finances are complicated or you need help with more than just investing, maybe estate planning or tax stuff, then a human can give you more tailored support.
Okay, that makes sense. So we've covered the basics of investing, the different options out there. But let's be real. There are a lot of myths and misconceptions about investing that can hold people back.
Totally agree. And Lowry tackles those head on in the book. She doesn't shy away from the tough stuff.
Let's talk about some of the big ones. Investing is only for rich people. I hear that all the time. What do you think?
That's just not true anymore, is it? Things have changed, especially with index funds, fractional shares, and all these micro-investing apps. You don't need a ton of money to get started.
Another one is, I'm too young to start investing. Why is that a myth?
Compound interest. It's all about compound interest. The sooner you start, even with small amounts, the more time your money has to grow. It's like that snowball effect. Start small, but it gets bigger and bigger over time.
Lowry uses the story of Jake and Stacy in the book. They're both 26. Stacy starts investing $50 a week right away. Jake waits 10 years. Guess what? Stacy ends up with way more at retirement, even though she put in less overall. All thanks to that head start and compound interest working its magic.
It's amazing, right? It shows that time is your biggest advantage when it comes to investing. Start as early as you can.
And then there's the classic, investing is just gambling. How do you address that one?
Yeah, that's a common one. Look, every investment has some risk, but smart investing is not about luck. It's about making informed choices based on your goals and your comfort level. It's about understanding how markets work, diversifying your investments, and not panicking when things go up and down.
Lowry really emphasizes having a plan and sticking to it, right? Even when things get a bit rocky. Which is a perfect segue to the next part of the book, where she goes into long-term investment strategies, especially that buy and hold approach.
Oh, the buy and hold, yeah. That's all about investing in good companies or funds for the long haul, not trying to time the market or make quick profits. It's about weathering the storms and staying focused on the big picture.
She talks about those dips in the market actually being opportunities to buy more of your favorite investments at a discount, right? It's about having the discipline to stay calm and not sell everything when things get a bit scary.
Yeah. She even talks about her own dad giving her advice when she was like 20. He told her to just hold on tight when the market went down. Don't react emotionally. And that advice has stuck with her.
That's great advice. It's so easy to get caught up in the fear,
Yeah.
But staying focused on the long game is key.
It's a marathon, not a sprint, as they say.
Exactly.
Yeah.
And Lowry even uses the 2008 market crash as an example. People who held on to their investments through that whole thing, and then the recovery that followed, they made some serious gains. Time and patience can really pay off. Okay, so we've talked about financial wellness, picking investments, busting myths, and thinking long-term. But there's another really important thing Lowry talks about, aligning your investments with your values.
Now that's where things get really interesting. She goes into impact investing, which is basically putting your money where your heart is, investing in companies that are trying to make a positive difference in the world.
I was surprised to learn that impact investing doesn't have to mean lower returns.
Right. Lowry talks about this index, the MSCI KLD 400 Social Index, which has actually done better than the S&P 500. It really shows that you don't have to sacrifice returns to invest ethically. There are companies out there that are both profitable and doing good things for the world.
That's great to hear. What are some examples of impact investing that people might know about?
Oh, so many. You can invest in companies that are all about renewable energy, sustainable farming, affordable housing, even companies that are really focused on diversity and inclusion in their workforce.
It's about supporting the things you care about, using your investments to make a difference.
Exactly. Lowry also mentions SRI, socially responsible investing. It's kind of like impact investing, but more about avoiding companies that do things you disagree with.
So if you're really passionate about the environment, you might choose not to invest in companies that are big polluters, for example.
Right. It's about using your money to support the kind of world you want to see.
I really appreciate how Lowry gives practical tips for getting started with impact investing, like really researching funds to make sure they align with your values and not just taking their word for it.
Yeah, don't just go by the label, right? You got to do your homework, understand what companies the fund is actually investing in. And there are robo-advisors that specifically cater to SRI or halal investing for people with particular religious beliefs. It's all about finding options that match your values.
Okay, we've covered a ton of ground. We talked about getting your finances in order, all the different types of investments,
Yeah.
debunking those common myths, thinking long term, and even aligning your investments with your values.
It's all about taking control of your money and making choices that are right for you and your values.
But Lowry has one more really important topic, and I think it's a good place to pause for this part of our deep dive. Avoiding scams.
Oh, yeah, that's a big one. It's so important to know what to look out for.
Lowry gives some really good advice on how to spot a scam, and her first tip is keep it simple. If it sounds too good to be true or it's super complicated, it probably is a scam.
Trust your gut, too. If something feels off, walk away. Don't let anyone pressure you into something you're not comfortable with.
She gives some red flags to watch out for, like high-pressure salespeople, promises of crazy returns, and advisors who aren't properly registered or certified.
And remember, if something sounds too good to be true, it probably is. Lowry reminds us that there's no such thing as a risk-free investment. Everything has some level of risk, and you need to understand that before you invest.
So before we move on, I want to ask you, our listeners, a question. Think back to that financial oxygen mask analogy. How are you prioritizing your own financial well-being? Are there any areas where you could be doing better? Maybe creating a budget, building that emergency fund, or tackling some high-interest debt?
It's a good time to reflect, right? Remember, taking care of yourself financially, it's not selfish, it's crucial. It's the foundation for everything else.
Welcome back to our deep dive into Broke Millennial Takes on Investing. We left off talking about scams and how to spot them, but now let's move on. Lowry gets into more detail about choosing the right brokerage firm in this next section.
Yeah, that's important, isn't it? It's like the bridge between, learning about investing and actually doing it.
Exactly. She compares different types of brokerages,
Yeah.
from those full-service firms with, human advisors to the discount brokerages and those online robo-advisors. It's a lot to take in.
It can be overwhelming, yeah. But Lowry lays it all out, gives you a clear way to make a decision.
So what are some of the big things to consider when picking a brokerage? What does Lowry focus on?
Well, fees are a big one, right? Different brokerages charge different fees for trading, account maintenance, all sorts of things. You got to compare those carefully. And she also talks about the services they offer.
So it's not just about buying and selling stocks. Some of them offer extra services, like retirement planning or tax advice.
Exactly, yeah. Some people might want that hands-off approach. They're comfortable doing everything online. Others might want that personal advice and guidance from a real person. It really depends on what you're looking for.
And comfort with technology, that's a factor too, right? Some brokerages have these slick apps and platforms, while others might be a bit more complicated.
Totally. Lowry has some good tips, like test out their customer service, see how responsive they are, explore their website, try out their app, make sure it's something you can actually use and understand.
It's like trying on shoes, right? Make sure they fit before you commit.
Haha, exactly. It's your money, your future, so it's worth taking the time to find a brokerage you feel good about.
Okay, so you've picked your brokerage, you're ready to start investing. What's next? What does Lowry say?
Now she dives into risk tolerance, which is super important.
Risk tolerance, that sounds serious.
It is. It's basically like, how comfortable are you with the ups and downs of the market? Can you handle seeing your investments go up and down, knowing it's normal in the long run? Or do you prefer things to be more stable, even if it means potentially slower growth?
So there's no right or wrong answer when it comes to risk tolerance. It's more about what you're comfortable with.
Exactly. It's very personal. Depends on your personality, your financial goals, how much risk you can handle without, freaking out. Lowry says it's important to be honest with yourself about this. Don't try to be a high roller if you're not actually comfortable with that level of risk.
Makes sense. You don't want to be losing sleep over your investments.
Exactly. Investing shouldn't be stressful. It should be a way to build wealth and reach your goals in a way that feels good for you.
So how do you figure out your risk tolerance? Is there like a test or something?
Lowry has some exercises in the book, questions to ask yourself. It's about thinking about your past experiences with money, how you felt when things went well, how you reacted when things went bad, how much could you potentially lose without panicking, things like that.
Lowry also talks about time horizon, which is
Mm.
connected to risk tolerance, right? Can you explain what that means?
Sure, yeah. Time horizon is just how long you plan to invest before you actually need the money.
Mm.
So, like, if you're investing for retirement and you're, say, 30 years away from retiring, you have a long time horizon. You can handle more risk because you have more time to recover if things go down. But if you're saving for a down payment on a house in a couple of years, well, that's a short time horizon. You need to be more careful, choose safer investments so you don't lose money right before you need it.
So time horizon and risk tolerance, they go hand in hand.
Exactly. You have to consider both when you're making decisions about your investments. Lowry has some great examples in the book that show how these two things work together.
And of course, she talks about the emotional side of investing, which can be tough, especially for new investors.
Yeah, emotions and money, they can be a tricky mix. Lowry really emphasizes the importance of managing those emotions, especially when the market is volatile.
It's easy to panic when you see the market dropping,
Yeah.
right? All those headlines about crashes and corrections, it can make you want to just sell everything and run.
That's why it's so important to have a plan and stick to it. Don't let your emotions control your decisions. Lowry talks about taking a long-term perspective, reminding yourself that those ups and downs are normal. She even talks about her dad giving her advice, telling her not to react emotionally when the market went down. That stuck with her.
Great advice, right? It's about staying calm and riding out those bumps in the road.
Exactly. Investing is a marathon, not a sprint. Lowry gives some tips for managing those emotions, like focus on your long-term goals, remind yourself that dips are normal, talk to a financial advisor or someone you trust if you're feeling overwhelmed.
Take a deep breath, don't panic, make rational decisions, not emotional ones.
Hmm.
So, as we wrap up this part of the deep dive, what are some key takeaways for our listeners?
I'd say finding the right brokerage firm, understanding your risk tolerance and time horizon, and learning to manage your emotions, especially when things get a bit crazy in the market.
Those are all really important things to keep in mind. What about you, listeners? What are you taking away from this part of the book? Think about your own risk tolerance, your time horizon, and make sure your investments are aligned with those.
And remember, investing shouldn't be a source of stress. It should be a tool to help you achieve your goals and build a better future.
Welcome back to the final part of our deep dive into broke millennial takes on investing. We've covered so much already, building that solid financial base, picking the right investments, figuring out your risk tolerance, all that good stuff.
And now it's like we get to the good stuff, the really interesting parts, like aligning your investments with, well, your values.
Yeah, that really stood out to me too. Investing isn't just about like making a pile of money. It can also be a way to do some good in the world.
Lowry talks about impact investing, right? Putting your money into companies or funds that are actively trying to make a positive impact, socially or environmentally.
I always thought impact investing meant you had to like sacrifice returns, but Lowry kind of debunks that, doesn't she?
Yeah, totally. She brings up the MSCI KLD 400 Social Index, and that's historically outperformed the S&P 500. So it's proof that you can actually do good and do well financially. It doesn't have to be one or the other.
That's really cool to see. What are some examples of impact investing that, our listeners might be familiar with?
Oh, tons. Think about companies focused on renewable energy, sustainable agriculture, affordable housing, even companies that are really committed to diversity and inclusion in their workforce.
So it's about finding investments that match your own passions and values.
Exactly. Lowry also talks about SRI, which stands for socially responsible investing. It's kind of like impact investing, but more focused on avoiding companies that do things you consider unethical.
Right, like if you're really into environmental stuff, you might avoid investing in companies that are big polluters, right?
Exactly. It's like putting your money where your mouth is, supporting the kind of world you want to see.
And Lowry gives some really practical advice for getting started, like researching those funds carefully, making sure they're actually doing what they say they are.
Yeah, don't just go by the marketing. Dig a little deeper, see what companies they're actually investing in. And there are even robo-advisors that are specifically geared towards SRI or halal investing for people with specific religious needs. It's about finding those options that fit you.
So we've talked about aligning your investments with your values. What else does Lowry cover in this last part of the book?
She goes back to the importance of, staying informed, keeping up with what's going on in the investing world. Even once you've started investing, you got to keep learning.
Yeah, there's always something new to learn, right?
Yes.
Especially with money stuff, it's constantly changing.
Exactly. She recommends reading, books, articles, websites about personal finance and investing. There are podcasts, webinars, online courses, all sorts of things.
And of course, you can always talk to a financial advisor if you need more personalized advice.
Definitely. Lowry also emphasizes patience. Stay focused on your long-term goals. Don't get caught up in the hype or make rash decisions based on fear or greed. Investing is a marathon, not a sprint.
She's all about staying the course, riding out those market ups and downs, and trusting that compound interest will do its thing over time.
Yeah, time is on your side if you let it be. And Lowry reminds us that investing isn't just something you do once and then forget about. It's a lifelong journey. You keep learning, keep adapting, and you make adjustments as your goals and your life change.
So as we wrap up our deep dive into Broke Millennial Takes on Investing, I want to leave you with a question.
Ooh, a good one, I hope.
Think about this. What's one small step you can take today to get closer to your financial goals? Maybe it's creating a budget, maybe it's setting up an automatic savings plan, or even just researching different investment options.
Sometimes it's those small steps that make the biggest difference over time, right?
Absolutely. Don't underestimate the power of just starting. Take that first step and get moving towards financial empowerment. You don't have to be an expert, just start learning and take action.
Great advice. I think we covered a lot of ground, didn't we? Lots to think about.
We hope you enjoyed this deep dive into Broke Millennial Takes on Investing. Don't forget to connect with us on social media. Let us know what you thought. Ask your questions, all that good stuff. Until next time, keep learning, keep growing, and happy